Hey, what's going on, friends? Omid here with you once again on a Monday to make sense of all the stuff that's going on. There's a ton of things happening, so hang in there with me. We're going to do it a little bit backwards today, okay? So here's the market, here's the rates, but I'm going to come back to that. As I have been saying on this channel for the last 6 months, regardless of what it is that the Federal Reserve does and doesn't do, the one thing that will make a difference is employment. That was the last domino to be knocked down. Is as long as BLS, Bureau of Labor Statistics, starts reporting accurate data, that's the last thing that's holding up this economy, and that leg will go out, and that's exactly what's happened. So job growth showed up at 114,000 instead of the accepted 175 in July, right? And that made unemployment jump up from that also had unemployment jump up from 4.1 to 4.3, which was the magical number that's going to push the Federal Reserve to a place. Because remember, they have a dual mandate. One is to control pricing, and the other one is to continued employment. So when they see a contraction like this, they're going to have to dump it down. Now, lots of questions out there about if there's going to be an emergency meeting coming up because of what's happening in the stock market. What's happening in the stock market, if you haven't paid attention? So Berkshire Hathaway sold off a load of their holdings in Apple. That was a big, big tell in what's happening in the economy. This report over here at wealth.com this morning, they Instagram that there was $1.93 trillion lost today. I can't verify that, but I wanted to stick that in there just so you see there's a little bit of kind of fear and anxiety and all that stuff that's happening. Keep your wits about you, research stuff as you see it. I am in agreement with these folks in Bloomberg, where I don't think we're going to see a emergency rate cut is going to be unlikely. Because remember, the stock market's now coming down off of its highs of 41, and now it's sitting at 37 and change, and everything is taking a loss, like this article over here says. But this is exactly what the Federal Reserve needed. This is exactly how we're going to control inflation, by having a runaway stock market that had zero fundamentals operating off of anything, and it was just basically high off the supply of, oh my goodness, everything is so wonderful. Well, it's kind of sort of not, and that was the last thing that fell. So at this point in time, they're saying that there's a 55%, 60% chance of a recession. I believe it's probably going to be a little bit higher than that. And the reason why I tell you that is because of the way that things are reacting right now. So back to our regular programming, we had a pickup of 7 trading sessions last week. That was for the positive. This was wonderful and was much needed. Why is this picking up? Well, this is volume of monies that you're watching here. So as the stock market empties and people take their cash out of the stock and cash out, they have two places to put it. One in cold hard cash, and two in bonds. And that's what this is. This is the mortgage bonds, right? So that's why you're seeing a higher volume. Higher volume available money pushes rates down. Now, we did have a bit of a profit taking, as well as the ISM manufacturing report that showed healthier than originally thought. So the bond market has lost a little bit. All the traders wanted was just a smidge of a push, and they were going to take their money off the table, and that's exactly what they did. So if you locked in last week, congratulations to you. Don't feel like you missed out on it for this week. It'll never go up in a straight line, never comes down in a straight line. So you're going to have to work with professionals who understand the market and give you good advice of when to lock and when to float. Now, as we move forward, last week, 6.81 nationally. This is for conforming loans. Please keep this in mind. $250,000 loan, as it says right over here, right? So conforming loans are going to always be cheaper than high balance loans. So in King County, in Tri-County area up here in Washington, 766.5 is the conforming loan limit. And then anything above that up to 977,500, that is the high BAL. The high BAL is going to always be more expensive. So 681 it was last week, 6.34. That's a 0.5% less off of 1 week's of a run. So this market is primed to be able to get better and lower rates, which is fantastic news for all of our home sellers, home buyers, our builders out there. Keep in mind, the minute that this thing, if it continues on doing what it's doing, and we see rates in the low sixes, high fives, you're going to have 1 billion people bum rush this market and drive those prices of the homes up. So do keep that in mind if you are a home buyer watching this. Now, what's happening for this week? ISM report this morning. Not a whole lot going on. Nothing, Nathan, nothing's happened really this week. Thursday, you get initial jobless claims. On Wednesday and Thursday, you do have note auctions, treasury note auctions. I'll be watching those to see if anything else happens with it, but do keep your head clear. There's a lot going on. Don't panic. And for those of you guys that are in stocks, listen, these markets go up and they come down. The last thing and the worst thing, I'm not a stockbroker, but the last thing that I would tell you is all throughout these years, don't jump in and jump out, jump in and jump out. There's nobody that can time these markets, okay? As always, appreciate your viewership. Please like and comment and share this with one person that you like and love, so we can get the education level of our nation to go up and understand why things are happening. And we'll catch you on the next episode for next year's.